Assalamu alaikum. In this video, we will talk about company accounts and its characteristics. Okay, so a limited company has a separate legal identity from its members. What this means is basically that a limited company can, for example, sue and can be sued. The best way to understand separate. Okay, so a limited company is run and managed by the directors but is owned by the shareholders. The shareholders invest in the limited company by buying shares in that company, and as I mentioned before, their personal liability is limited to the amount they have paid to their shares, and they do not have to use their personal assets to repay the financial obligation. Okay, so there are two types of companies: private limited company and public limited company. Private limited companies do not sell their shares to general public at large, but public limited company is listed on the stock markets and anyone can buy shares from there, but that's not the case with the private limited company. This can come in a theory question, that what is the difference between a private limited company and a public limited company. So now you know the answer to that. Okay, so another theory question can ask you difference between ordinary shares and preference shares. So the two main differences between ordinary shares and preference shares is that the owners of ordinary shares have right to vote and to participate in profits, but a preference shareholder is not does not have any voting rights. The other difference is that ordinary shares, the rate of dividends depends on the level of profits and the dividend policy of the company. So basically, the rate of dividend is not fixed. But in case of a preference share, the preference shareholders receive a fixed rate of dividend. Okay, so the main things that are tested in questions is right issue of shares, bonus issue, debentures, and share premium. I will try to explain them. Okay, so a right issue is when a public limited company usually raise additional capital by offering shares to public at large. This basically means rights issue is to issue shares to public. What is the bonus issue? Bonus issue is when shares are issued by a limited company and it is issued to existing shareholders bonus shares are issued to existing shareholders without payment and issue shares to the existing shareholders without any payment. So this basically means capitalization of profits and this has no effect on the capital structure of the company. Debenture is basically acknowledgement of a debt by a company and it bears a fixed rate of interest which is repayable on the specified date. Okay, so now what is a share premium? Share premium is the price above the par value. The par value is basically the original value of a share, the cost value of the share. So if shares are issued at price over the par value, that's basically the profit of the company. And it is reported separately as share premium. Share premium might be used to issue bonus shares. Share premium is basically our profits, the profits that we earn from by issuing a share at more than par value. Okay, so I explained what a rights issue is. Now I'll try to explain the entries, the double entry which is made when we issue shares at par value or issue shares at premium. So when we issue a share at par value at its original value, the double entry for it is bank debit and share capital credit by the value, by the amount of the shares. And when the shares are issued at premium, which means at greater than its original price, its par value, the bank will be debited by the par value plus the share premium on the issue of share, and share capital will increase by the par value and the share premium will increase by the premium value or the price above the par value. This is basically your profit. Okay, so as I mentioned before, that bonus issue of shares is basically the issue of shares without the payment, and the shares are issued from our profits or from our share premium, and there's no effect on there's neither decrease nor increase in our share capital. So the double entry we make when we issue bonus shares is share premium debit, because our profit has decreased, so it will be debited, and our share capital will increase. So this basically means that we used our profits to issue more shares to our existing owners. So there's no effect on the capital. This basically means capitalization of profits. We are using our profits to issue shares. Okay, so retained earnings or retained profit and dividends. So retained earnings is the amount of net income left after the payment of dividends, and dividends is basically the profits that we give to our shareholders, some part of our profits which we give to our shareholders. So the entry made for the payment of dividends is retained profit debit, because our profit is now decreased by the amount of the dividends we paid, and bank credit. So the bank is credited because we make the dividends payment from our bank account. So the overall result of this entry is that our overall capital is okay. So what are general reserves? General reserves are basically the amount kept aside from the profits earned by the company during the year. So the entry made when we transfer profits to our general reserve is that our profits or retained profits is debited because it decreases, and our general reserve is credited because it's increased. So again, there is no effect on the balance of capital when we okay. So now what is a revaluation reserve? So revaluation reserve is basically an adjustment when our assets are revalued. So the entry made when an asset is revalued is that the provision for depreciation of that asset to the date is debited. The non-current asset account is debited because the value of our non-current asset has now increased, and the revaluation reserve is credited by both of the amounts. So basically, this part of the debit side includes the difference between the revalued asset key cost and the at cost of the non-current asset, the cost at which we bought, and the provision for depreciation is the accumulated depreciation on that. Okay, so in this video we covered the entry and the description of rights issue, the bonus issue, the description of debentures, share premium, general reserve, revaluation reserve, retained earnings or retained profits, and lastly, dividends. So this was a short video on the basics of all of these things, which this